Hello, everyone. Great to be with you. It's fun to get to share our story of how we've come from just a couple of years ago with an idea of doing insurance to now over 100,000 active end users. I wanted to, Andrew was generous enough to give me a chance to share a story with you guys today, and I wanted to hit a couple of different points for different folks that are out there. One, if you're a fintech, I think you guys should be paying attention because your users want to buy insurance from you. And if you're an investor, this insurance space is changing very quickly, and it's a huge and very interesting opportunity. So I want to start off with some general facts that everybody knows about. Banking has dramatically increased in the last decade. The growth of mobile money, every story that you guys all know about why we're here at this conference, but insurance has not, right? The insurance industry is still very old school, very focused on the top kind of 10% of the market, and not innovating for mass market consumers, and definitely not innovating to be integrated with fintech. And that's what Turaco is working to solve, and working to dramatically increase this 10% number to something much closer to where the bank population is. The next slide, thanks. Cool, so the challenge is none of you guys woke up today saying, I want to buy insurance, right? Anybody? Any weirdos like me out there? Anyways, the problem with insurance is it's much more difficult to sell than credit, right? If you put an app out there or an opportunity for people to get financing, you're going to get a lot of users and you're going to get them very quickly. If you're trying to get people to make a decision to give up money now to protect them for the future, that's a much more difficult sale. When we first started this process, we looked at that and we said, maybe there's not the kind of demand that could drive a massive business. We found that that's not the case at all. It's actually a problem of access. And the way to approach it, and for the fintech founders in the room, I would encourage you guys to think hard about the kind of consumer behavior around what you're trying to sell. When you're selling insurance, you have to get someone in a rational moment, right? You have to catch them when they're saying, I'm willing to forego something in the future for the sake of being protected or not having as much risk in my life. You don't want to try and sell them insurance and say, cool, give me money today, right? It's a very emotional decision to reach into your pocket and pay for something. It's more of a rational decision to say, I want insurance and I want to be protected in the future. So it lends itself very well to a subscription model where you don't have to choose to pay today, or you have to choose to pay, you don't have to actually pay. Or you can say, in an ideal world, we would just collect credit card information from everybody and bill them once a month to pay for insurance. Because there's no credit cards, our approach is to partner with fintech companies to integrate insurance into products that customers are already buying. So how do we do that? We have a really elegant API that we've built where we make it very easy for fintechs to say yes. All that we ask for is access to end users, and then we supplement that with a very hands-on partnership approach. So many of you investors in the world, particularly those from San Francisco that are here, know about embedded insurance, right? The whole idea of you have a user flow where you're selling something and then you have a button and you say, add insurance. That doesn't work. It doesn't work very well in the West, and it definitely does not work in the context where we sell. If you have that user flow, you might get 1-2% of people that are choosing to buy insurance from you. The way that we do sales, we get 50, 60, 70% of people saying, yes, I want to buy this insurance product. I'll share some case studies in just a minute, but one to focus on is a partnership that we just launched with 1 Acre Fund, which is an alternative lender for farmers in Western Kenya. Now they're all over the continent. They have 1 million farmers that they sell to, 500,000 farmers that they're selling to in Kenya alone. We just launched a project with them a couple months ago where their farmers now have the opportunity to buy medical insurance through the partnership with 1 Acre Fund. The way that works is they've opted in to share their data. Once they share their data, we give them an outbound phone call, like very old school call center outbound phone call. When we get in touch with those farmers, 58% of them have said yes, they want to buy insurance. So we went from 1 or 2% of farmers insured to now 58% of farmers, tens of thousands of farmers, 150,000 actually, farmers as of today are insured through that partnership. So it's a massive leverage technique, and for the rest of the fintechs, think about using humans, not just technology, to solve your problems. It has made the total difference for us and our ability to sell. Just to highlight another partnership, Tugende, I don't know if Michael made it into the room, but I wanted to give him a shout out. One of our earliest partners. The value proposition for a lender is so compelling for insurance because it actually makes your loan portfolio more healthy just by providing coverage. And one of the key reasons that people fail to pay their loans is the fact that they have some kind of medical emergency or some financial shock. So Tugende has actually embedded our loans with 100% of their sales. So we're insuring all of Tugende's boda drivers. It's a fantastic value proposition. They pass the cost along to the drivers love the product. So I probably have 25 other partnerships that I can talk to you guys about, but I just wanted to highlight a few and share a little bit about what we're doing. I just think it's a very interesting moment in time where, like what's happened in the credit industry, you've gone from fairly small percentage of the population that actually has products and has access to products. We're seeing a massive kind of rocket ship taking off in the Insuretech space. There's a few other competitors that are here in the same respect. So for investors, take a hard look at it. For fintech founders that are in the room, come and talk to us. Your customers want to buy insurance from you, like half of them. It's a big opportunity to add a value-added service to what you're doing. So I want to leave it there, let you guys get to lunch in a minute, but take a few questions if there's any from the audience. So open for anyone that has any questions on this.
Do you underwrite?
Yeah, so currently our local entity is an insurance agency in Kenya, a brokerage in Uganda, and a business partnership in Nigeria. We're not underwriting any of our own risks today. There are some really good microinsurance regulations in each of those markets that we'll probably be applying for shortly. It's just a margin play, right? It didn't make total capital efficient sense to start from there. So in Kenya, our entity's Elwood Insurance Agency, and we're underwriting with Sanlam, APA, and Prudential. In Uganda with Sanlam and ICA Lion. In Nigeria, which is about to be launched, we're partnering with AXA and Cornerstone. I wish those guys actually had APIs that we could plug into, by the way. We have all the tech built to be able to do that side of things, but they still are back in the flat file days. At least they're not using paper anymore.
So just in terms of your partnerships, the economic split, who takes the majority of it and who owns the customer in the end? And because I assume the fintech still own the customer, you just providing the back-end service. So how does the economic split work?
Yeah, the fintech still owns the customer. Our brand is known to the fintech, so they know how to process a claim, and regulatorily we have to let them know who we are, but the fintech still owns the customer. Another question over here?
My question is around the low penetration rate of insurance in Africa. You said you think the problem is around access. There's debates around the product. The product is mismatched. And then there's also the issue of the fact that in this part of the world, the customers don't trust the underwriters and the underwriters don't trust the customers. I don't know what those three parts is the key issue around.
That last part is not limited to this part of the world.
Yeah, okay.
I mean, insurance is an industry in need of redemption, right? The core product delivery of an insurance company is claims benefit, right? You guys make a claim, the insurance company pays it. That's what the product delivery is. The term used in the insurance industry for that product delivery is losses. Like, you as a customer, me serving you is a loss if I'm like a big insurance company. So we're completely turning that equation on its head. If you ask anyone on our team what business we're in, they'll say we're in the claims paying business, which is the only way to establish insurance as kind of a long-term opportunity. You're absolutely right on product. The big insurers are mostly focused on that top 5-10% of the market, so they've been less innovative at designing product for mass market. Our products are 50 cents to $5 a month. So designed for mass market consumers. Other questions? Cool. Almost lunchtime. Oh, one more, here.
All right, so thank you very much. I just wanted to understand now that you're looking at the low end of the pyramid in terms of your market. How are you managing premium renewals? Because I've had a chance to interact with such a product, and I think that would really a challenge in terms of ensuring its continual renewal. And of course, that ties to what you just said, that insurance is never bought, it's actually sold.
Great question. So, question around renewals, how we manage that. If you sell insurance direct to consumer for a month-by-month payment, and the customer has to choose to pay each month, you're going to get pretty much 100% drop off after 3 months. So it's back to that question around: is it an emotional, like, choosing to pay decision, or is it in a rational mind saying, I'm willing to make this sacrifice, but don't ask me about it again. So we have to catch people in that moment. Because we work with these partnerships, less than 0.5% of people cancel their insurance policy. We have incredibly high renewal rates. The only time that we lose a customer, to the earlier point of who owns the customer, is when somebody potentially churns out of the partner that we're selling through. So we have, the majority of people that we insure stick with us, 95% plus.